안녕하세요. 미국주식으로 은퇴하기 미주은입니다. 미주은이 대신 만나러 갑니다. 시간이 돌아왔습니다. 미주은이 대신 만나러 갑니다 시리즈는요. 미국 주식에 투자하고 계신 분들께서 한 번쯤은 만나서 이야기를 나눠보고 싶을 만한 주식 전문가 혹은 각종 산업 분야의 전문가들을 여러분들을 대신해서 제가 만나보고요. 그분들의 훌륭한 인사이트를 들어보는 값진 시간입니다. 오늘 제가 여러분들을 대신해서 만나볼 전문가는 멀리 미국에 계신 분입니다. 세계적인 투자기관 웨드부시의 매니징 다이렉터 그리고 시니어 리서치 애널리스트직을 맡아서 웨드부시를 직접 운영하고 계신 미스터 댄 아이브즈를 모셨습니다. Hi Dan, how are you?
Good. I don't know what you just said, but it sounded positive, so I appreciate it.
Yes, it is all positive. You can trust me. So welcome to Mijun. Mijun is my channel name. First of all, thanks a million for sparing your precious time for me and audience on my channel. I'm sure you are a very busy man, so I really appreciate it.
No, it's great to be here. Great to talk to you.
Thank you. I have shared a few video clips of you on my channel already, so most of my subscribers should recognize your face. But please, can you kindly introduce yourself to the audience briefly?
Yeah, so Dan Ives, I'm a managing director of Wedbush Securities in New York. I've covered tech stocks about 21 years on Wall Street, and really started covering traditional software going back many years ago. And then, I think many know us where we got super bullish on Apple coming out of the iPhone, and then ultimately tried to double down on Tesla, a year or two later in 2008, 2009. And I think, look, our overall DNA is we tend to see forest through the trees as a tech analyst. We look at a lot of key growth themes, valuation. I'm a big fan that transformational growth stories can't look at just over the next year. Because I think a lot of investors, it's very easy in the noise to miss a lot of those stories. And, two of our favorites over the last decade have been Apple, as well as Tesla, and then, of course, Microsoft. And, I think that's sort of reputationally, I think, within the Wall Street community is how we're known.
Excellent. Impressive. Yeah, so big congratulations for all of your achievements so far. 21 years. Yeah? So fantastic.
Yeah, it's been a long time. But look, it's like we've had as many failures as successes, right? And like I'm a big believer that when you cover stocks for a living, a lot of times like you have to learn from your failures. And ultimately, I think your failures in terms of stock calls, I think ultimately makes you better over time. And for us, it's kind of the historical period by covering tech stocks, going back to the bubble, the bust, financial crisis, and through everything else in between. I think it's given us, a unique vantage point, which also it creates a lot of opportunities to handhold investors through volatile periods, even like right now, right? Like the New York City cab driver is bearish in the market. Fed's raising rates. You got a horrific Ukraine war, inflation, risk off. Where to me, I think tech stocks are as oversold I've seen the last 5-6 years. So that's ultimately what creates a market, but just give you a little flavor for how we view things.
I'm very happy to hear you're still bullish on tech stocks. So let's have a lot of discussion today. Around 5 or 6 weeks ago, you were on Yahoo Finance TV and mentioned that tech stocks were way oversold. Since then, Nasdaq index has gone up by more than 12%. So your call was perfectly accurate. What about now? We still have a lot of investors on the sideline waiting for bigger market crash. Do you still feel like tech stocks are oversold, or is it too late to buy tech names now?
Look, I mean, my view is that right now, I mean, my two dogs upstairs, which will probably bark soon, they know the Fed's path over the next year and a half. The point is, once the Fed raised rates and laid out the path, ripped the Band-Aid off, I view that as a green light to own tech. Because when I look at tech stocks here, I still think another 20% up between now and the end of the year. I think relative to growth, way oversold. And I think it's a bifurcation. The froth, the Zooms, the DocuSigns, the Coupas, some others. So a lot of the e-commerce names, those multiples will continue to compress. But when I look at areas such as software, cybersecurity, some of the large cap tech, Apple, Google, Microsoft, Amazon, I believe tech stocks move higher. And I believe 1Q is going to be a positive catalyst for the sector.
So in your case, the growth stocks, the smaller growth stocks, the Kathy Wood is always talking about, you are not really bullish on those then. You separate.
Look, I think exactly. I think, look, I mean, Kathy, obviously, like, you know, she's much more forward thinker in terms of some of those names. I think a lot of those could work out well over time. But I think in a rising rate environment, you gotta be really focused on the sectors where growth could navigate any sort of headwinds. And it's ones where, not just from a cash positive and earnings perspective, but it's ones where, you know, I think a lot of these names, COVID pulled forward growth 3 to 4 years. And I think it's dangerous kind of catching a falling knife on some names being like, they're cheap because they were 300 and now they're 80. They could go to 60, right? And ultimately they could go to drinking age at 21. And that's why I think you focus on software, cloud, cybersecurity, a lot of the large cap names, you know, especially Amazon, Apple, Microsoft. And then, you know, which has been one of our favorites, continues to be is Tesla, because I think that's the only way right now to play that green tidal wave that we believe is just kind of in that first, second stage.
I mentioned earlier to you before we start recording, but I watch almost all of your interview videos on Yahoo Finance and CNBC. So I am aware that you have been constantly bullish on Apple, Tesla, and Microsoft. So among FANG names, would you still prefer Apple and Microsoft to the other stocks like Google and Facebook?
Well, look, Facebook, I think fundamentally, look, you could change that name every week. Meta, Tim, Jane, whatever you want. I mean, that core fundamental business model, it's advertising on social media in terms of Facebook platform, and metaverse not going to be monetization for the next 3 to 4 years. The Apple iOS changes significantly changed the Facebook business model, which is why we're not as bullish on Meta, despite, you know, the stock coming down. But I believe, look, Apple, to me, on a sum of the parts, it's the strongest product cycle in the last decade. It's going to continue to play out in terms of iPhone 14 coming out later this year. You still have 20% of the customer base that have not upgraded. And the services business, more and more, is going to get re-rated, which is why we think sustainably there's over a $3 trillion market cap. You know, in terms of cloud as a theme, only 40% of workloads are in the cloud. I think the best way to play cloud is Microsoft. I think another way to play it on some of the parts is Amazon because of the AWS piece. And then I look at names like Google and GCP. I think as a cloud sort of pocket, best ways to play are Microsoft, Google through GCP, Amazon, AWS, as well as Salesforce.com.
We just mentioned the AWS from Amazon. Do you see any chance for the Azure from Microsoft catch up with AWS in the near future?
Oh, they've closed the gap significantly. And I think it's a big reason Nadella's had that golden touch, which is why we think ultimately Microsoft's a $375, $400 stock. You still have less than 50% of the customer base that's upgraded to cloud. Now, more and more in the enterprise side, that's a key part of the Microsoft base. I think they're going to gain more and more share. You know, I think especially you're starting to see that play out. And I think, you know, I think there's some that will say Microsoft best days in rearview mirror, but they were saying that at $150. So I'm just saying, it just speaks to my view. We're still in that kind of, you know, early days of this playing out.
Sure, makes sense. Talking about Apple, for now, actually, the situation around Apple is not very promising. I mean, China has implemented strong lockdown to fight with the COVID virus, and the war in Ukraine is still going on. And of course, we cannot ignore the highest inflation in 40 years either. So consequently, it was reported, I believe it's last week, that Apple was cutting their production numbers for iPhone SE and new iPods. What do you think about the current situation of Apple is facing? Are you worried about the current ones?
I mean, look, they're Teflon-like, but just like Tesla, they're going to continue to see supply chain issues. It's taken off roughly about 10% of units this year for iPhones in terms of supply chain. But look, I think a lot of times the headlines are scarier than the reality. That's why, like with Apple, we do a lot of supply chain checks, a lot of hand holding. You're always going to have cuts around the edges, but ultimately, relative to supply chain, it's the strongest product year in roughly about 10 years. Mm-hmm. So when you look at that all playing out, especially higher ASPs coming out of China, you can have iPhone 14 coming out, that full 5G upgrade cycle. We remain steadfastly bullish on Apple. But it also goes back to like, the haters will hate. That's never going to change. But as it all plays out, especially for Apple, I may continue to execute this year, which is why that stock is kind of rose from the ashes, right? 150. Now we're kind of nearing back to that 3 trillion market cap. I think it just shows the street starting to better appreciate the growth story. So, and also the one thing I also just say is that, look, it's probably the most complex investing climate that I could remember. Because you got heartbreaking war in Ukraine, you got rising inflation, you got Fed that's going to raise 11 times. You know, it just, the supply chain, obviously, worst supply chain situation that we've seen. But I think that sometimes in chaos creates opportunities.
Sure. What about the Apple's valuation? Because I just checked the valuation of Apple. We are at 29.6, so almost 30 times of earning. Historically, the Apple was traded on 24 times, 25 times. So it's quite higher than usual. So would you still not worry about the valuation?
Look, for many years, I mean, Apple was, you buy it at 12 times earnings into an iPhone cycle, sell it at 16 and fade it on the other side. That was the way you trade it.
Yeah.
But my view, the last, call it 4 years, is that you have to view Apple on a sum of the parts. You cannot view it on a straight PE. Viewing it on a straight PE, it's like looking at, Tom Brady and saying just a football player. It's looking, Messi, it's just a soccer player, football for those in Europe. The point is, like, Apple just on a straight PE, I think doesn't tell the story. Some of the parts, services, hardware. I believe services business, 80 billion annually, given the multiple, is worth 1.5 trillion.
Right.
I believe the hardware business is worth 2.2 trillion. Which way we believe the ultimate valuation is probably closer to 3.5, 3.7 trillion on the sum of the parts. You view it on a straight PE, looks expensive. It just goes back to like valuation. I think, especially on some of these names, whether it's Amazon, whether it's Apple, whether it's Tesla, it's Microsoft, can't view it straight PE. I think you missed the story. And look, I'm not saying we're right. That's just our view.
Sure. Great points. Regarding Apple, I have one more question. And one thing that Apple shareholders are always hoping is to see in the near future, they want to see Apple car. So what kind of chance do you see for Apple to make a car in the future? Do you think it is happening?